Basically, I'm doubting this green, but also respectful in a way that it's powerful green. This green is different from this green run up. See, this green ran up in 1, 2, 3, 4, 5 bars. This green ran up in 1 bar. I would prefer the multiple bar run up like this. This is a better run up than this. The big, giant, fat bar run ups are likely to give you more trouble than the broken up multiple bar run up. Now, if you can look at this, the move down here is a lot more fluid than this drop, and look at that powerful green come back. You don't get a powerful green coming back after this multiple green bar move up. So the broken move up is better than the solid single bar move up. I'm going to demonstrate that here. This green bar move up is more bullish than this green bar move up. I would much prefer, boom, you see, I would much prefer this scenario. With that being said, I staged into the short like that. And after getting my position on, I began coming out of the play here. In all honesty, I did not get the move all the way down here. I wish. I got the move to here. And the reason is because my target when I have a fat bar, I always tell you this, is to cut the move in half. If you get anything big, cut it in half. So if I take the green and I cut this in half, I'm more or less right there. From here to there, boom, I'm out of the play. All right. So I didn't get this extra wrinkle down to here. I did not. All right. But it was enough for me to grab a fairly decent profit with this trade. Now, that's how I played the play. Now, a lot of people, when I do this, when I'm staging in, they say, Oliver, where's your stop? My stop is when I'm staging, I'm always using a maximum loss per trade initially. So I'll always start off with a maximum loss per trade. My maximum loss per trade is $6,000. Your maximum loss per trade might be $60. It's the same thing. All right. It's just different zeros. If I were to stage into this play like this, boom, 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 and it just kept going up, and I do one more here at the 200, and now at this point I'm negative 4,008, then if it keeps going up, negative 5,000, negative 5,005, negative 5,008, I'm starting to get out, boom, before I exceed my 6,000. Regroup, maybe go back into the play one more time. If it sets up again, maybe look for something else. And if I can't make that up, that becomes one of my 6 or 8 losing days of the year. So I'm always using a maximum loss per trade initially. So that's $6,000 negative maximum loss per trade. Okay. Now, once the play starts moving in my favor, it's no longer maximum loss per trade. I drop. So let's say the 6,000 is here. I drop my maximum loss now to the peak because I don't want this dropping and then turning back to break that peak. Once it starts rolling over in my favor, that's it. It's got to now deliver or get eliminated above the high. So I start off the trade with a maximum loss, and then I drop it. Once the trade starts moving in my favor, I tighten up, and that minimizes the risk. So I go from 6,000 max to boom. Now my stop has been moved to the high as this starts to drop, and then I start coming out here, letting the stock drop into my buy orders. Out, 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 out. Done. Looking for that 50% mark. In reality, you want to look for that 50% mark from the whole green. Remember, I told you that when you get consecutive colors, right, you can combine them into one bar for added clarity. So when you combine the whole 3-bar move up and look at it as one bar, then you cut that in half, you get a more accurate read of where the 50% is, more or less. Remember, it's never going to be so perfect. And there's your 50% mark right there. And that's me coming out totally right around here. So I didn't get this because here's the thing. Not that it's not possible to go past 50%. It's I don't play around when the bar is super big. Do you understand? I don't play around with it. I get out at 50%. Maybe sometimes I leave a little bit in and see if I can get more. But for the most part, I'm not playing around if it's a power bull bar that the move down is fighting against. This is a power bull bar. It's fighting this power bull bar. So I tend to opt more for being a little more conservative and just coming out of it at the 50% mark. Some of my traders got more with this morning, and they got this leg here, which is another leg all the way down here. That's how I played this. But in truth, most of you are not even close to deploying the pyramid approach to entering your plays. I like to give you a glimpse of where you might go, but also I like to cover how you can still profit from this. And in some ways, and sometimes you can profit better than the style that stages into the entry because you have the ability to be more precise with the color change. So let's say, for instance, you want to play the same play that I'm playing. Meta gaps down, rallies into resistance. You're just simply waiting for a color change. You get no color change yet. You get no color change yet until, boom, red eliminates green there. And it's your choice. You can go with the elimination of the body or the tail. Some of you might want to do what I do. I do both. When the tail is little, I just include the tail. But if the tail causes me to have to give up a little bit more of my profit potential, I'll go with the body. If it's negligible, I'll go with the tail. But these pennies can add up when you're playing size. So if that tail causes me 6 extra cents on 10,000 shares, I'm eliminating the tail. 6 cents on 10,000 shares is a lot of money. Here is the color change. Boom. Your stop is above the high, and this is your risk. And so your entry, boom, 2 to 3 lots or whatever. Here's your stop, and you're going to start coming out. Now, if you play this according to strict method, you're not coming out of everything on this initial drop. You're coming out of part. So let's say you had 2 lots. Let's just do it with 2 lots. Let's say you came into this with 2 lots here. Stop. You took 1 lot out on this initial drop here. You bring your stop to the break even. So now you're playing with the house's money. You're playing with the market's money. The way I want you to look at this approach, this incremental coming out approach, is that your first profit take is the real trade. Anything else, you're now going to make sure that can't lose any money. But that's not, the second part is really not part of the trade. That first profit is your trade. Now, the second part is the cherry on top of your sundae. You've already got the sundae. Now, can we put a cherry on top of the sundae? And if we can't, we're just going to sacrifice the cherry at break even. But it's better to approach your trading this way so that you don't get into this psychological trap of feeling like you've lost if your extra lot stops you out. That was the cherry anyway. You've already won on the trade. So when you go into a trade for 2 lots, in reality, the trade is 1 lot. The other lot, the second lot, is your cherry lot. That's going for the grand slam. That's going for the home run. We might not get a home run. We might win on the real trade, which is 1, but we're going to save 1 to try to get more. But we're going to make sure that that 1 that's left does not lose. And that's where the break even comes in. So we go in with 2. We're stopped above the high. We take profits on one. Boom. We move this stop to break even. So now we've taken money out of the market. There's no way to lose. We can't lose what we have in our pocket. We can lose what's digitally on the screen still, but we can't lose what we've actually pulled out of the market. That's the point I'm making here. Once again, enter under the green, 2 lots. Boom. You do not wait for that red bar to finish, by the way. As soon as the red crosses below the green, boom, 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 you're in that for 2. Here's your stop. Profit take, that's fine. 1 lot. Move to break even. Boom. And because of this power bar, I would not be adding here, but normally you're adding on the next color change. That's usually a mandatory add on the next color change. I wouldn't do it because we're fighting green, but I would do it on this scenario. But here's your next profit bar. Now let's delve a little bit into why this is your next profit bar. Because when you get the opposite color, it is usually not smart to take profit on the next desirable color. You want to take profits 2 bars after green in a short. I would write that down. 2 bars after green. So here's green. 1, 2. Boom. You can take. Do not get in the habit of taking profits 1 bar after green in a short. Same thing in long, by the way. You're shortchanging yourself. The first red bar is an igniting red bar. The second red bar is your follow-through red bar. You can take profits on the follow-through red bar. You should not take profits on the igniting bar. What do I mean by the igniting red bar? The red bar that's starting the redness all over again after a brief pause from green. This is igniting. That's not a profit bar. Take profits on the follow-through bar. So that's a good rule. In another case, see that green there? This is not your profit bar. The follow-through bar is your profit bar. See here? This is not a profit bar. This is a profit bar, and that's a profit bar. And you can take profits on every follow-through bar after that. So if you were in the play still here, this is not a profit bar, no, but this one is a profit bar, and this one is a profit bar. This is not a profit bar, but this one is a profit bar, and that one is a profit bar. So once again, this is not a profit bar, but this one is. Get in the habit of taking profits 2 bars after the opposite color, not 1 bar after the opposite color. With that being said, if the 1 bar after the opposite color gets big enough, you can cut it in half and that becomes 2 bars. So let's say, for instance, this bar kept dropping and dropping, and if it dropped low enough to be considered, you could say, okay, now this is 2 bars really, and I can take profit on the second part. So if the bar gets elongated after the opposite color, that can count as 2 bars. But if it's normal, and this one I would definitely consider as a normal red bar, you're not taking profits there. It's right next to green. You take profits on the next bar. And so if you were playing this without the add, here's how it works once again, step by step now. 1 in 2 lots. That's step 1. Step 2, stop. Step 3, profit take 1. Step 4, move stop to break even. Step 5, profit take 1 again, out, done,